So guys, in this session, we're going to have a trade review. I promised you guys that once in a while, we're going to be looking at trade reviews on setups I took. And most times let me not say most times, sometimes I share my trade setups in the free Telegram community. And what we're going to look at here, some of the setups are in the free Telegram community. So you can also check the free Telegram community and also check the authenticity of the trade review we're actually conducting right now. And I would also make the link to the possible weekly forex focus regarding this particular trade review we're going to be looking at. I'll make the link available in the description section to this particular session. So this is GBPUSD and this is the daily time frame. I called our attention to this rejection block during the weekly forecast and also called our attention to this bullish order block during the weekly forex forecast, how we saw price mitigated this rejection block and we had the bearish movement to the downside. This delivery was on Monday. Price gave this crazy impulse to the downside, bearish impulse, took out the sell side liquidity, and what we can now see is volume went back to the upside and closed above the daily bullish order block, now sponsoring this movement back into this rejection block zone, taking out this buy side liquidity, and we had this bearish movement to the downside. So from the weekly perspective, what we saw here in the weekly time frame is a reaction of price at this weekly bullish order block, and we saw this bullish impulse to the upside. Now price reacting at this mitigation block. This is where we have the last up close candle before the bearish movement that took out this low points, and now we can see price return and mitigated that, giving us this indecision candle because price was reacting at this mitigation block and then respecting this weekly bullish order block. So we have equal movement of both buyers and sellers within this candle. So what we can now see, price gave us the indecision candle. So basically now we would see that the price movement or the structural perspective is bearish based on structure, but now based on most recent price delivery, we are seeing bullish momentum. We're seeing what? Bullish momentum. Now what we can see from the indecision candle is this: price took out sell side liquidity, took out buy side liquidity. So to anticipate bullish movement, I told us to see the possibility of the bearish movement to the downside, then we frame bullish movement, or we could see price just continue bearish to the downside, take out the sell side liquidity, in extension this sell side liquidity. So more decision came from lower time frame when we had the weekly perspective established for both the bearish and the bullish. So from the daily time frame, we looked at the possibility to these perspectives. So from the daily time frame, I told us to see how price reacts at this daily bullish order block. Then we can frame bullish movement when price return. So I told us to expect the bearish movement to the bullish order block. And then we look forward to how price reacts there for us to frame the word bullish movement, or we would see bearish continuation to take out sell side liquidity and in extension this sell side liquidity because the market condition is bearish. Price created this high, taking out internal range liquidity and took out the swing low, external range liquidity, broke structure. So from the 4-hour time frame, I drew our attention to this fair value gap we have here. So let me draw that out so that we can clearly see that. So we have this fair value gap, which I drew our attention to. I told us to wait to see how price dips into the fair value gap, and that will help us determine if we're going to see bullish movements to the upside, or we could see bearish continuation to the downside. If price violates this fair value gap, then it's going to act as an inversion fair value gap to further sponsor bearish movements. But then we can see we have this internal bullish structure because now we have price gave this pullback, failing to continue to the downside to take out this low. We had this movement. Price took out this high, a pullback, price further went to the upside. So we can see we have this internal bullish structural perspective. And then price returned to this 4-hour bullish order block. I called our attention to that. So this was 4-hour bullish order block, and then we had this bullish impulse to the upside. So I told us that if we are expecting to see bearishness when price falls to the downside into this fair value gap and violates it, then we could see it retest it as an inversion and we have the bearish continuation. But due to how price reacted at this 4-hour bullish order block, and we have what this bullish movement to the upside, I told us to also look to frame the possibility of a bullish movement from this fair value gap, because this is where the buy move began to the upside that took out this buy side liquidity. We had the sweep of this buy side liquidity, and from the weekly perspective, we can see we have what's bullish momentum due to this bullish candle. So back to the 4-hour time frame. So in the 4-hour time frame, I didn't really execute trade on Monday for this particular week because we can see this is Friday. So I waited for price to return to the downside here. You know, I called our attention to the setup I shared one time in the Telegram community, how we executed trade from the fair value gap resting here. And because I think this was the movement of price sponsored by I think that should be NFP. I can't vividly remember. So basically now, from the 1-hour time frame, let's get to the 1-hour time frame. So here in the 1-hour time frame, we can now see the confluence again that within the 4-hour fair value gap is this 1-hour fair value gap here. So we can clearly see that. So back to the 4-hour time frame, and then we're going to play price to see when price returned into the fair value gap, what framed the bullish movement to the upside. So let's play price to see, guys. All right. So this is it. I didn't take the sell movements. So now price came to the downside. So let's do it with this so that we can check and frame the perspective that I actually looked into. So we saw how price dropped to the downside into this fair value gap. And what we can now see is, first, this price took out sell side liquidity. This further went down, took out sell side liquidity, but volume failing to close below. Volume is what's closing above. And now we can see this rejection, this impulsive rejection to the upside. So upon the delivery of this candle, so, you know, I love to switch time frames. You know, you can just go to the 4-hour time frame. You can, from the daily, you can go to the 4-hour, to the 1-hour, 15, 5 minutes, and any lower time frame. You can even from the 1 hour still want to check the 30 minutes. I just like going to the different time frames to just check before establishing a solid reason to execute a trade. And, you know, basically, I would always tell you, you won't always win in the market, no matter how careful you are. You get it, but you would stay profitable, but you will not always win. So to the 1-hour time frame. So here in the 1-hour time frame, this was what I saw. Exactly what I saw when I was on the chart was this change in state of delivery. We had this change in state of delivery from the 1-hour time frame. So, you know, basically from the 15 minutes and the 5-minute charts, we have the possibility of seeing the market structure shift. And what we can see here, we have the single candle order block, because here price mitigated our zone. You know, you identify the single candle order block in the sponsorship zone. You identify, not everywhere in the chart, no, in the sponsorship zone, your point of interest. And we're not seeing that your single candle order block will always play out. You saw the GU trade I took on Monday, how I lost because I also traded it off the single candle order block, from the single candle order block perspective. So we can see here we have a change in state of delivery. So let's check the 15-minute time frame. Here in the 15-minute time frame, we can see clearly what we have in the 15-minute time frame is the market structure shift. So let's just put that in the 15-minute time frame swing high points here. So we have this market structure shift. So we can see our price again dipped here, also swept the low, volume failed to close below, and we had impulse that gave us this market structure shift. So clearly now what we can just see, we have this high point that price sponsored bearish movement to. Now the high point was violated when price mitigated our sponsorship zone. You know, the 4-hour is connected to the 15-minute time frame. Basically, when you're being told to take trade execution, based on what we've been taught, from the 4-hour we go to the 15 minutes. By mastery, you can still refine your zones in far lower time frames. So in the 5-minute time frame, what we can now see is also what a market structure shift based on the 15-minute high. From the 5-minute high point, we have the market structure shift from this high point. So we can see how price went to the upside. So since now we've established the market structure shift, so back to the 1-hour time frame. So this is a 1-hour time frame. What we can see is just a sweep of the high. We can see, but here we have a change in state of delivery. We get it, guys. We can also check the 30-minute time frame if you want to. So here in the 30-minute time frame, you can also see we have what a market structure shift. So back to the 1-hour time frame. You know, from the 4-hour, I love to mark sponsorship zone, point of interest, which also we can just use the daily to mark the point of interest, but then we can refine in 4-hour and then look out to see how those things play out in 1 hour, 15 minutes, 5 minutes, and you can go to any lower time frame you want to, but please just work with, at most for now, work with the 15-minute time frame. If you're so good and you understand the methodology, you can work with the 5-minute time frame and then possibly go lower. So what we can now see, this is the delivery, right? So now what we need to do is to identify the possibility of where this return, and then we anticipate our continuation. What I can just see is we have this fair value gap here, where price gave us this fair value gap, return and traded below it. But now we can see price again further went to the upside. So to me, I can also consider this as an inversion fair value gap. We all could see the possibility of price returning to, and then we have the bullish continuation. And clearly we can see we have the single candle order block, a sweep of this low, volume close above the high. So let's check the 30-minute time frame. So here in the 30-minute time frame, we can now see in the 30-minute time frame clearly we have this as the inversion fair value gap from the 30-minute time frame. So from the 30-minute time frame, this is the inversion fair value gap. This is the high that sponsored the movement to the downside that took out these low points, and now we have movement to the upside. This is an inversion fair value gap. In confluence, we have price gave us this open close price before the bullish movement that took out the high points. So clearly now, since we identify an inversion fair value gap here, and when you check the 1-hour time frame, we can see we have the single candle order block model, a sweep, volume further went above close, above this high points. So in the 15-minute time frame, let's get to the 15-minute time frame. So in the 15-minute time frame, if you didn't mark the inversion fair value gap from the 30-minute time frame, when possibly you don't use the 30-minute time frame, you know, based on the sequence, we can see that we have that here in the 15-minute time frame. So we can consider the 15-minute time frame fair value gap here, which is now going to act as an inversion fair value gap. So let's check the 5-minute time frame. So here in the 5-minute time frame, what we can just see, we have this down close candle before the bullish movement to the upside. You get it, guys? So basically now we can work with this words down close candle before the bullish movement. So I'm giving you guys the review with the perspective as though I've not traded this. You get it? So we can now consider the down close candle here before the bullish movement. So we have the market structure shift. Price broke this low point. Now we can see is price fell, gave this push to the upside, but now we can see price returning to seek this sell side liquidity. So we can set our long position order here. So let's set it at the high of the bullish order block. So let's see, we can set that now at the low. Let's set that at the low here, and let's get back to the 1-hour time frame. You know, since this is price mitigating a higher time frame sponsorship zone, so when we go to the higher time frame, we'll now target where we're looking forward to see price aim for. So back to the 15-minute time frame, I think that is now appearing. Okay, so this is it. Let's check the visibility to this. Okay, This should appear in the hourly time frame. So let's get back to the 1 hour time frame. So clearly now what we can see is we have, okay, price already took out this buy side. Basically we have this buy side, we have this buy side here, and in extension we have price possibly returning to this bearish order block because it is unmitigated, and we have this little fair value gap here. So but you know, I wouldn't want us to target so far. You get it? Basically I work with 1:3 to 4. So let's first target this bearish order block here. So let's see how price delivers to the upside. So let's log this and then let's play price to see. So we can see now price returned to the downside, activated our trade entry, and now we can see how price is pushing to the upside. So let's see. Now we can see that now price reached our target area. So what we can see now is, let's go to the 15-minute time frame. Here in the 15-minute time frame, what we can clearly see is we can see the return of price now to the zone, and price gave the bullish movements. We have the market structure shift here, and clearly what we can see is price fell, give this return. We can see how this cleared this high. So basically it's like saying we have the 4, price gave a return to the upside. Now price fell to 6 sell side liquidity, and now we can see bullish momentum to the upside. And this is 1 ratio approximately 8. So 1:8. So it's a nice setup, it's a good setup. So you can see from the lower perspective. So let's check the 1 hour time frame. So we can also see from the 1 hour time frame price reacted at the change in state of delivery zone, the single candle order block, mitigation, and impulse to the upside. Price took out this buy side liquidity, and let's see how price went far to the upside. So when price went to the upside, I also shared the setup in the community. We should expect to see bearish movements. You can check the Telegram community, guys. So I was looking at this zone here, because what we can see is this is where we have price mitigated this zone and sponsored this movement. Now we have this candle wick unmitigated. So we have this rejection block zone. I expected to see price again react at it, and then gives us a bearish movement to the downside. I expected that. So let's do it with this so that we don't have a clouded chart. So expected to see price return here, and then we frame bearish movement to the downside. So basically let's play price to see what happened. All right, so let's clear this because I took this particular position. Let me show you guys. So when price came to the upside to this zone, I saw this candle, price took out this high, and then I saw volume fading to continue to the upside. Immediately, I think from the 4 hour was when I executed a short position at this candle here. I set up an order there, and the stop loss was above, and I was targeting to see price return to this open close price, looking at this unmitigated wick. So let's send that to the downside. So let's play price to see. So what we can see was price fell to the downside, but then price did not reach my target area. And what happened, I was not even on charts. That was the truth. I was not even on charts when this immediate movement took place. I think this was CPI. This was CPI. CPI gave this impulse, but at the end of everything, we still had this bullish impulse again back. So I took a loss on this particular trade setup. You can check the Telegram community. These things are there. So I took a loss in this position. Though price really fell to the downside, I respected my zone. I just work with the immediate market execution from the 4 hour. And this is the delivery. And we can see how price didn't really reach my target area, and we had this reversal to the upside. So this is just a quick one, guys. Cheers and God bless you all.